let's shift focus now to BSE. BSE will be levying an additional 15% exposure margin on derivatives. Additional margin levy will be effective from the 1st of Jan on securities under market-wide position limits. To discuss this, we have Mr. Ramamurthy, who's the MD and CEO of the company of BSE, joining in. Mr. Ramamurthy, thank you very much for joining in. This additional exposure, additional margin levy, which you have now indicated will be applicable from the 1st of Jan. What's the rationale behind it? Does it tie in with what Mr. Ashwini was just telling us about this euphoria which seems to be setting in into the markets, and to probably curb that a little bit?
I guess there is a misunderstanding on the circulars issued. This is not what you're understanding as any apply of any additional margins on the existing derivatives contract. Let me clarify, the margining system at this point of time, which is in existence for the derivatives market, will continue to exist.
Right. So what does this do to your business itself? You know, because on the one hand, the exchange, you know, if you just take a look at the way the BSE stock has returned value to shareholders this year, 350%, and still looking strong. One of the things that stood out was the increased share of revenue coming in from derivatives, and you increasing your market share out there as well. The last known number was close to 13.5%. What are your thoughts on this segment, the new products that you're launching, and the likely revenue and market share from the derivative segment in the next couple of years?
See, derivatives market in India, 23-year-old, the new products that we are talking about, the first product, Sensex derivatives, was launched around 31 weeks before. So in my opinion, to talk about a very long-term roadmap at this stage is not possible because it's still early stages. But a short-term, immediate roadmap and what is our thought process on this product and what its way ahead, we can share. If you look at it, last Friday, around 1.5 million users have still now participated into it, and around 43 crore contracts got traded. And around 350 members are into the system, and around 50 FPIs are in the system for this. We feel there is a long way to go here. More market participants are yet to come, and more FPIs will be coming in the near futures. And so if you ask about what will be the plan for this product, it is to increase the depth of participation and more and more participants coming in, particularly the institutional people like FPIs. That is very important for us. And to create sustainability of the current volumes and grow on it organically is very important. That will be the immediate goal. Revenue and volume projections we do not make because we are not measuring our success in terms of any of them. We are measuring our success in terms of how useful this product is to the market. Therefore, we are measuring it in terms of what will be the participation. That's where I said more users should come, more FPI should come, more members should come.
So if you can just help us, sir, with some kind of numbers. I'm not asking you for exact volume data, but what do you think the traction could look like? Not now, say over the next 1 to 2 years. And I also wanted to understand both on derivatives and also the traction in Bankex futures. What is the kind of visibility that you see over there?
Certainly on Bankex, see, it is just around 10 weeks since introduction. And I think this has been accepted very well by the market. The traction is good and very satisfactory. On the 10th week of introduction last Monday, as you would have seen, a sizable amount of contract got traded, and the total notional value traded was around 62.5 lakh crores. Notional values do not carry much sense. Having said that, that's also an indicator though. We had around 240 members on the day participating in that contract. I think this contract holds a lot of value for the investors. Investors are able to relate to it. As I always repeatedly tell, we are always introducing complementary products to the existing product profile in the derivatives market so that people are able to relate to it and use it in conjunction with the existing product. Bankex is one of such products, as you are aware. So therefore, I think the future for this is very good. And we have around 1 lakh UCCs participating already into this. We expect it. And in my experience, what I have seen is, in my last jobs, for a product to pick up, it takes around a year or two. we found that was defied by Sensex and it started growing very fast. Bankex is even faster than that because now people all have their infrastructure ready with BSE. They have already taken the front end, back end software enabled. UCCs are put, KYCs are done. So I think the traction is fast and it will go faster than even Sensex is mine.
Okay. Actually, the reason we are stressing on the derivatives market, Mr. Ramamurthy, is also because, you know, the market share, as my colleague was also pointing out, has jumped to over 14% from around 1%. And all this has happened in just the last 6 to 8 months. I take your point that you've done this also because of new product launches. So I want to understand in derivatives, what is the roadmap going ahead? Are there any more new products that you would be looking to launch to open up the market further?
It's a very good question. We should think about new products, but honestly, it is just 11 months since I have been here. And since the product launch, it has been just 31 weeks. So as I just said before, for me, the immediate roadmap would be to strengthen this product, make it sustainable, increase the participation, depth of participation, bringing in more institution and institutional members. We should certainly think about new products. That will happen in the next stage. The products could be multiple types, as you would appreciate. They could be strategy-based products, they could be index-based products, or they could be stock-based products. The sky is the limit, as you know, in terms of thinking about products that can be useful to the market. It's also very important to find out what the market wants. It's not that, no, what we can introduce, which is voice of customer I always have been embarking upon. So we will be seeking the views of the customer once these two products sort of stabilizes. And then whatever the market feels that BSE should do, which will be useful for them, that's what we will do.
Okay. Just quickly, sir, you know, the SME segment has seen a lot of action this year. How significant is it in terms of a contribution, and what might your outlook be on it going into next year?
Very, very good question. SMEs are a segment which is very close to my heart for various economic reasons, as I've always been talking about. My honest reply is I don't think we have made any dent into the SME sector. We talk about having around 500 companies listed, but that is, I think, a drop in the ocean. There are a lot many more good SMEs in the market who need to be supported, who need to get listed, who need to get visibility, who need to get access to finance in a simpler way. I think our entire goal in the coming years and months will be to approach more and more SMEs to find out how we can help them. I think it's not actually in terms of what it contributes to the bottom line, it is becoming important. Honestly, it does not contribute much to the bottom line. I don't look at it as something which is going to contribute to the bottom line. It is more as a national service. It's a duty of a MII like us to get to SMEs to help them, because they are backbone of our economy.
All right. And finally, before we let you go, sir, you know, it's been a big wealth creator, like we've pointed out. Let's talk about good old cash market as well. I remember, you know, we speaking for the first time when you took over, and you said your immediate goal in the cash market is to get to the 10% market share mark. As we speak, it's close to around 7%. So by when do you expect it to go to 10%? How does that pan out? And secondly is the cash that sits on BSE's books. What are your plans with that?
So on the first point, even I do not know when I will reach the 10%. The institutional participation in BSE is abysmal. The domestic institution need to consciously think about concentration risk and start giving some amount of volumes into BSE so that there can be an organic growth of all the institutions. We are working on it and we wish it happens ASAP. As far as the cash is concerned, MIIs like us should have a good amount of balance sheet, as you know, to support ourselves in terms of any exigencies. Having said that, we are also embarking on multiple avenues of investment which can strengthen BSE from the cash that we have. For example, we are into big resource building, be it human resources, be it technological resources. Because if you are growing volumes today, technology is the backbone. We are in that sense a fintech company, as you would say, whether we want to call it that way or not. Therefore, clearly, building technology resources is very important, where we are putting in a lot of money and effort and time. And also, we are investing in, see, for example, in GIFT City, we have made a sizable rights issue contribution. with the budding and upcoming ONDC, where we can have some benefit and synergies. We have put in some money through our BSE investments. We are also looking at avenues which are synergistic to the existing business of us, where if we invest money, it will be a long-term goal for BSE.
All right, sir. It was great speaking with you. Thank you so much for joining us on CNBC TV18, and it's been a big, wealth creator, and of course, you've generated a lot of money for shareholders as well through your platform. So thank you so much for speaking to us, and all the best for the new year. All right.
Thank you so much, and Happy Christmas and Happy New Year.
Merry Christmas to you too. Thank you, sir. Well, let's